Welcome to The Explainer. Today, we're going to talk about one of the most tempting and honestly, one of the most costly mistakes any investor can make, picking something just because it's cheap instead of because it's actually good.
So let's just get right to it. The fundamental truth that trips so many people up is that cheap and valuable are not the same thing, not even close. In fact, confusing those two is a massive trap.
And I'm serious. Chasing what seems like a bargain can be a direct path to losing a ton of money. It's probably one of the easiest traps to fall into in the entire market.
And that's exactly what we're going to call it. Let's dive in and really explore this mindset that's so common, but so dangerous, the price trap.
You know, it's a totally natural instinct, right? We're all basically wired to look for a good deal. So when you look at the stock market, it's so easy to see it as this giant bargain bin.
Just look at the psychology going on here. That column on the left, that's pure hope. It's all emotion. But the one on the right, well, that's the cold, hard reality that's so easy to ignore. The dream of a stock bouncing back completely misses the most important question of all. Why did it crash in the first place?
And this, right here, is what you have to burn into your brain. A low stock price is not a 50% off sign. More often than not, it's a giant, flashing red warning label. It's the market's way of telling you that there are deep, fundamental problems with the actual business itself.
So if hunting for cheap stocks is just a losing game, what's the alternative? Well, it all comes down to shifting your focus from the price to something way more important. It's value.
They don't start their day by looking for the lowest price tags. They start by asking a completely different and way more powerful question about the business itself. This quote just nails the mindset shift. See, you're not just buying a ticker symbol on a screen. You're buying a piece of a real operating business. The price is just what it costs to walk in the door. The value is what you actually own once you're inside.
This is the value you should be looking for. A quality business is built to last. It has what smart investors call a moat. Basically, a durable competitive advantage. Maybe it's a super powerful brand like Apple or some unique technology that's really hard to copy. That moat protects the business, letting it generate wealth year after year, pretty much regardless of the market's mood swings.
To make this whole price versus value idea really hit home, let's just use a simple, everyday analogy. Okay, imagine you're at the store. You've got two choices. There's the cheap pair of shoes. They feel like a win at the cash register. Then there's the quality pair. Yeah, they cost more, but you can just tell they're well made.
Of course, right? After you've had to replace the cheap pair 2, maybe 3 times, you've already spent more than you would have on that single quality pair that's still going strong. The initial bargain ended up being the more expensive choice.
It feels like you're saving money in that one moment, but it just turns into a black hole, constantly costing you more and more down the road through terrible performance and permanent losses.
Okay, so you're sold. You want to buy the quality shoes, not the cheap ones. But how do you actually translate that to the stock market? How do you spot a quality business and avoid falling into that price trap?
Well, it really just comes down to these 3 powerful shifts in how you think. First, you hunt for great companies, not just low prices. Second, you start thinking in terms of years, not days. And third, you accept that an excellent business is worth paying a fair price for. It's okay.
And that's the whole point. When you follow that checklist, your entire mindset shifts. You're no longer just a gambler betting on a stock kicker. You're becoming a partner, a part owner in a great business for the long haul.
So let's bring all this home with the single most important takeaway from our whole explainer today.
If you only remember one thing from all this, let it be this. Change your objective. Stop hunting for the biggest discount.
Because true, lasting wealth isn't built on some lucky bet or finding a hidden shortcut. It's built on a foundation of quality and making smart, deliberate decisions over a long, long time.
You've got to learn to ignore that little voice in your head that gets all excited by a low price tag, because that voice, well, it's asking the wrong question. This question is a trap. It focuses only on the price, which is the least important part of the equation, and it completely ignores the underlying value of what you're actually getting.
Instead, you need to replace it. Start asking a question that forces you to think like a business owner, a question that gets to the absolute heart of what it takes to build real, long-term wealth.
You have to ask, is this business strong? Does it have an advantage that's going to last? Is it actually built for the future? Because when you start by asking, is this worth it? You'll find that in investing, just like in life, you get what you pay for, and quality always pays you back.